Bom dia, pessoal. É um prazer ter vocês aqui em mais um webinar da Corenet. Uh, esse é o nosso webinar número 43 do ano de 2020. Né? A Corenet tem aí feito uma série de webinars e eventos, como a gente prometeu no início do ano. Estamos aqui no nosso evento 43 hoje, juntamente com o pessoal da CBRE. Nós temos pessoas aqui, são excelentes profissionais e, particularmente, meus amigos de longa data, já fizemos muitas transações imobiliárias aqui. Temos o Fernando Terra, falando sobre a América Latina, o Nicolás Cox, que está como responsável pela CBRE na Argentina e no Chile, né? Ele é baseado no Chile. Nós temos o Andrés Cardona, que é responsável pela Colômbia, e o meu amigo Pablo Irizar, que está no México, né? E vai estar falando aí um pouco sobre o mercado imobiliário do México. Bom, agora eu passo a palavra para os nossos palestrantes. E, Fernando, fique à vontade. Seja bem-vindo a mais um evento da Corenet, todos vocês. Hoje, a única forma possível de viagem, essa viagem wireless, então bem-vindos ao Brasil. Bem-vindos a cá, Brasil.
Obrigado, Renato. E em benefício de toda a nossa audiência de fora do Brasil, vou mudar agora para o inglês, tá? Se me permitir. So, thank you, Renato, and thank you, Corenet, for this great opportunity. It's a pleasure to be here alongside with three of my CBRE colleagues from our Latin America region. Just to introduce myself, my name is Fernando Terra. I've been with the company for CBRE for more than 20 years. I'm responsible today for advisory and transaction services for industrial logistics and data center in the region. Renato has already introduced my friends. Pablo, again, good morning, Pablo from Mexico. Thank you for joining us, 6 a.m. your time. Andres from Colombia, and Nicolas, responsible for our operations in Chile, in Argentina. So I'll share with you my screen as we have put together a brief presentation. So that's a market overview where we'll cover relevant information on the local economies, how the economies are behaving with COVID-19 and the impacts on the respective real estate markets. And afterwards, we'll open to questions from the audience. So quick explaining how CBRE is structured in the region. So we started our operations back in '79. We have today more than 13 offices in 8 countries with 2,500 employees and more than 240 brokers. And the way we serve our corporate end user clients, we make use of not only the 13 offices that we have, but we partner with local best-in-class companies to cover every single country in the region, offering a full service approach where we provide advisory services, transaction management, project management, facilities management, and portfolio management. So with that, I'll hand over to Pablo so he can start sharing with us some information on Mexico. So thank you again for the opportunity.
Thank you. This is perfect. Thank you, Fernando. Hello, everyone. Well, we'll go from macro to micro. Based on the format of this presentation, we'll talk a little bit about the economy of Mexico. We all know that uncertainty is the main factor complicating not only Mexico, but the entire world in this economic recovery. Talking about Mexico, we were already sick a little bit before the pandemic hit our country. So we expect for our economy to decrease almost 10% this year. And we're hoping to grow around 3.2% next year. So based on these numbers, it will probably take around 3 to 4 years to recover to pre-COVID levels for our economy in Mexico. And we are so connected to the US economy that a main driver for our growth will be the expected rebound of the US economy next year. So we're hoping for that. Something that is good is that, even though exports have decreased around 16% this year, Mexico is still the US main trade partner. And we expect this trend to continue thanks to the free trade agreement, the US, Mexico, and Canada free trade agreement, a new investment from China, Canada, and the US connected to nearshoring. If we see this by quarter, of course, the second quarter of 2020 was the worst. We are, we decreased, our GDP decreased around 17.3%. We can see that, this pattern continues for the third quarter and the fourth quarter, even for the first quarter of 2021. And then we're hoping to have a growth starting the second quarter of next year. And of course, employment is a key indicator to measure how bad the crisis hit our country and how quickly we will recover from this crisis. Here too, the numbers are not great in this specific regard. The first, we did lose around 1.1 million formal jobs during the period between March to June. This is almost 4 times the job creation of last year. And if we consider how many jobs were created in 2018, which was around 800,000 jobs, that means that the pandemic, at least in these 4 months, wiped out the entire job creation of the last 2 years. We're fearing that a lot of the new jobs that will be created will be jobs with maybe a lower salary, limited or no health coverage, with less social benefits. And that's something that maybe some of the companies will be doing to avoid layoffs. But as you can see the graph, we did hit a very high unemployment rate, but this is getting better now, and hopefully it will continue to get better as we come out of this recession or this crisis. Talking about the office market, I'm an office broker, so this is my niche. Something that is important to share with everyone is that in the last 10 years, almost the last 10 years, we had a booming office market, a lot of construction and a lot of absorption. For the last 10 years, from the period between 2011 to 2019, 18, it was pretty much 8-9 years. We averaged net absorptions of maybe 350,000 square meters. In 2018, we had a record of almost 500,000 square meters of net absorption. And just for everyone to understand, net absorption is the actual new leased space. So if one company moves from one building of 1,000 meters to another building of 1,000 meters, that's gross absorption of 1,000 meters, but it's net absorption of 0 square meters. So 2018 was great. 2019 was also good, but it was already lower than our record year. We had a good first quarter of 2020 of around 70,000 square meters of net absorption. However, for the first time in 10 years, we had negative net absorption in the second quarter and the third quarter, and we're expecting for the fourth quarter to also have negative absorption. We'll be reaching a vacancy rate of around 20% by the end of the year, coming from 16% starting this year. And this is due to companies downsizing and subleasing. Interesting data that is not here, but it's interesting to share. We have around 1 million square meters of vacant space right now in Mexico City. And Mexico City is 85% of the entire market in the country. We have registered another 1.1 million square meters of a new construction in place right now. That's, I believe, the highest number of square meters being built in the continent. And we're also expecting the sublease space to to come, to be in maybe in the next 6 months around 300,000, maybe 500,000 square meters of space to be subleased. As you can see the graph, the rental rate, which is the orange line, was very steady for a long time. Somewhere in between $25, $26, $24 per square meter per month. Now, for the first time in many years, we are suffering a decrease in rental rate that we are expecting to start increasing again in 2022 and 2023, and we hope that pattern to continue in the following years. Just a note, I've been in the crisis of, I've been doing this for 27 years, so we survived the crisis of 1995, also the crisis of 2000, also the crisis of 2008, in different ways, but in all those cases, 1 year or 2 years later, we were back on track. So we're hoping this will be the same. Data centers. This is a fairly new trend in Mexico. We have around 500,000 square meters of data center space. The majority are in Guadalajara and Querétaro, which is the Bajío area. I have to say that the majority of these data centers transactions are either build-to-suits or sales of land that are directly negotiated by end users or by service providers with the landlords. There's a big opportunity for developers and for service providers like us to enter this market. Also, the government gets involved in a lot of these data centers. And that's a big trend. That's a big trend that will continue. I would say it's fairly new. I mean, even though it's been there for several years, it's fairly new in Mexico, and there's a huge opportunity of growth. Yeah. Well, finally, some good news. The Mexican industrial market up to the third quarter of 2020 is pretty much identical to last year, around 1.5 million square meters of net absorption. And we're even expecting for 2020 to be, for activity to be higher than last year by 15%. The best markets in the country have been Monterrey, Guanajuato and Querétaro, the Bajío again, and Guadalajara. You can see the vacancy rate is very low. And we have even sub-markets like Reynosa, Juárez and Tijuana with vacancy rates in the range of 2%. So even though rents have been flat in the last years, we do expect for rents to increase this year and next year and the following year. So that's a very solid and healthy market in Mexico. And finally, just who the users are. This is a very simple graph. As you can see, logistics are around a third of all the activity, manufacturing a quarter, and e-commerce 15%. And e-commerce is amazing, the growth. 4 years ago, e-commerce was only around 1% of the total demand in Mexico, and now it is 15%. So if you account for logistics and e-commerce, it is almost half the market, at least half the activity in 2020. I don't know if it's the same pattern in the rest of the countries in Latin America, but for Mexico, the industrial real estate market is the most sophisticated market. The majority of the owners are international developers or local funds or international funds or even real estate investment trust, FIBRAs. So it is the most institutionalized market among all asset types. And it's hot, it's dynamic, and it has to do a lot with US, Mexico, and Canada free trade agreement and the logistics demands. And finally, an interesting data is that 4 out of the 6 main transactions this year were Mercado Libre and Amazon. And with that, that's Mexico.
Thank you, Pablo. And just to answer your question, you're right. We are seeing pretty much the same trend in the region in terms of e-commerce becoming more and more relevant, right, to the existing demands, and also logistics for retailers, food. So I would say same trend. So let's hear from Nicolas and Andres to see if they confirm what we are saying, starting with Colombia. So hello, Andres, again.
Hello, Fernando, and good morning, everyone. So similar situation in Colombia. Our national GDP is projected to decrease by 8.2% this year, and to grow around 5% for the following year. So it's a slow recovery that we see through the remaining of 2020, and then good expectations for 2021. Our government is expecting to close 2020 with a 15% unemployment rate. So more than 570,000 jobs were created in the third quarter of this year. And that has been mainly donated, or the industries that have led the job creation were agriculture and construction. Our government is mainly focusing their strategy in foreign direct investment in infrastructure, technology, PPO sectors, and software development and IT. So we expect that this could represent about 2,900 new jobs in the country. And during the third quarter of this year, the mobility and the strict confinement measures taken by the government to mitigate the virus were lifted, and that has allowed the companies to start creating new jobs, and we start seeing a new and slow recovery. In terms of offices, I'm just going to go to the next one because I know we have limited time, so I'm just going to go pretty fast over the macroeconomics. And just go to the office, please. Thank you. So since 2017, we were seeing a market that had a vacancy rate decreasing. And we see in the graph a variation in the behavior of the vacancy rate. So the blue dotted line is what we expected the vacancy rate to behave like. And the green line is what the vacancy rate is like now. So it's a huge variation, which leaves us with a 12.7% vacancy rate at the moment in the office sector. Companies since March have decided to put on hold new decisions, and we are seeing a lot of companies vacating their spaces. We've seen about 55,000 square meters being vacated and returned to the inventory in Colombia. And but even though the vacancy rate is not as high to be scared of, because we don't have an oversupplied market yet, it's 12.7, and we expect to close 2020 by possibly 15% of vacancy rate. This obviously has led to a very dynamic variation in the transaction process. Tenants are being more conscious about it, and they have more leverage in negotiations, and they are starting to ask for special concessions like leasing contracts, capex investments, longer grace periods, and special discounts, not only on the new leases, but on their current leases. The recovery path is expected to begin in 2021. So we've also had a negative absorption this year. By the third quarter of 2020, we've had minus 45,000 square meters as negative absorption. And that was given to a good first quarter of the year. And so we expect a net absorption to be around the levels of 100,000 square meters for 2021. In the data center front, today we have more than 20 data centers operating in Colombia, and this number is expected to continue growing at a fast rate. And in the last 7 years, we've already seen about 18 data centers that were built in our country. So more than 20% of the data centers in Colombia are located within a free trade zone. And during 2019 and during 2020, we've seen a fast growth identified by industries and companies like Amazon, Amazon Web, OData, Hostime, and several others are wanting to enter our country. So during 2019, and Colombia actually is the 4th country in Latin America with the most area testing for data centers. And we anticipate that this will represent about 8% of the region's market. At the moment, we have about 4 million people home working compared to 122,000, which was pre-COVID. So good numbers for data centers, and we're expecting to see a lot of activity in the coming months. On the industrial front, this is good news as well. As Pablo was saying, the industrial market is the least impacted segment by the COVID-19, not only in Colombia, but I think worldwide. The demand on this segment is steady and is expected to continue growing, mainly with the entrance of new companies in our country, searching for strategic locations within the region, and also companies within the infrastructure field hired by the local government for representative infrastructure and construction. So the industrial market represents an accumulated net absorption of 25,000 square meters. That's not too much in 2020, and a vacancy rate of 19.7% of all classes within the industrial area. So even though Colombia is facing a 20% downturn on exports, the crisis represents an important opportunity for the logistic markets. And we've also seen important transactions like Mercado Libre as well, expanding their footprint here and entering the e-commerce. On the last mile, well, as I said, e-commerce has been growing and increasing the relevance in our market. The e-commerce sales in Colombia between 2013 and 2019 reached about $471 million compared to the numbers that we had in 2019. So we have about 15.2 million buyers in the e-commerce sales channel in Colombia. So we're seeing a lot of activity here, particularly in Bogota. The fact that the update of the government land management plans allows and postpone new operations within the urban areas of Bogota for things like last mile. And on the residential front, as I said, one of the main strategies that the government has for the economy recovery is the construction, and mainly construction for the social income housing. Today, we face about a 36% housing deficit in Colombia, and we estimate about 740,000 units demand per year. So we anticipate a huge demand. We're seeing massive numbers on breaking records on sales of social income housing in Colombia. And also on the leasing front, like multifamily, it's a new segment for our market, and we see a lot of players wanting to enter Colombia to play in this field. And I think there's a great opportunity because we have about 40% of the people that currently lease their home. So it's a huge market that hasn't been explored yet. I think that's it.
Yeah. Okay. Thank you, Andres. Interesting presentation, and thank you for bringing over the residential market or multifamily business to the table. We all agree that also an interesting trend to the whole region. So let's switch to Nicholas. Hello, Nicholas, again. So we'll start with Argentina.
Hello, guys. Thank you, Renato and Corenet, for the invitation. Argentina's situation, I think, is pretty critical. I'll say it's the pandemic hit very hard them and kind of a sluggish hit. Not very strong at the beginning, but they're suffering right now with all the situation they have there. I think the situation is not very off of the rest of the region. I mean, a significantly high drop on GDP growth projected for this year. Some institutions project that to be like 5%. I would say it's going to be way over that. More like to be on the 2-digit zone, probably 10%, if not more. Inflation is kind of under control for Argentinian standards at 36% a year. But the problem is that with the economy going very, very slow, the government hasn't been able to get many tax incomes. So they have increased their monetary base, and a huge spike on inflation is expected. That should be a very good reason to go to real estate as a protective investment, trying to find a way to protect your equity, try to find some real estate assets to park some money there and try not to lose value because of inflation. The problem with that is that the rent, and you can see there's a graph there with a diversion of almost over 100% difference of market value between the official exchange rate and the market exchange rate. So that's not a very good situation if you're a landlord and you have bought your property in dollars or an equivalent in dollars, and then your rent comes at a different or a much lower exchange rate. That's obviously not very helpful. That situation is not gonna change that much. One thing is that we need to understand in this market is real estate investment comes following two major patterns. One is long-term growth, and the other one is access to capital markets. And Argentina has none of that. So every single development that you can see in Argentina, it's funded by own equity on some developers, and it follows demand on a very non I would say it almost has tie-in demand instead of some speculative development. So it's not that you're going to have huge empty spaces because of excess of supply, but you're going to have delays on fulfilling that demand whenever the case is. So it's kind of a slow market to catch up on the demand. If you go to the following, please. When you go to logistics, I think despite of all the e-commerce activity that you might see, logistics has been very depressed, mainly because the slow growth and actually the contraction of the consumption. So the economy crisis is hitting very hard on this particular asset class. No new deliveries are being reported, and that's mainly because we're seeing some contraction on the surfaces that are being leased by some operators. On a side note, I don't have a slide for that. We've seen a growing market on data centers in Argentina. That's a trend that you can see throughout the region. I'm sorry, that's a detail on the surface we have on logistics market. But on the data center market, we've seen much interest for international players to get footprint within Argentina. They already have some data centers there, and they're looking for expand their footprint there. If we go now to Chile, here are some highlights that will help us understand how this crisis is hitting Chile, and how do we see a possible path for recovery in this market. Obviously, we're a very small market. We're just 18.5 million people with a high concentration here in Santiago. 7.1 million lives here. We're the second GDP per capita of the region. I think we're second to Panama, if I'm not wrong. And our economic outlook, well, it's not way better than that for the region. It's we're going to be seeing a decline of 5% for this year, and the projections for next year are of 4 to 5% growth, which is very, very good. Obviously, we're coming from a lower base, but every every time you hear a number that, it's kind of it's good news, definitely. Our inflation is under control. We don't see that being a problem in the next future. Excuse me. And Chile is a very open economy. We have 20 free trade agreements with over 64 economies, which is a very it is a problem when you're open economy. You're subject to all variation, trends variation on choppy waters you can find everywhere else, obviously affecting Chile, but that's a very good tool when you want to recover your economy. Having free trade and having an open economy helps you to increase the speed of economic recovery when you have some tailwinds. Some other things that you need to take into consideration when analyzing this market is that we have a huge liquidity, local liquidity, mainly given by our private pension systems. That private pension manages over $250 billion. Obviously, not all that money is here, but if you add up that to the insurance companies, which they have over 250 million in real estate investment. I'm sorry, 2.5 million UF, which is like $700 million in real estate investments. It is quite sizable if you compare that to the size of the market. And the one last thing I want to take from this slide is that our main industries remains to be mining. So a huge portion, 31% portion of our GDP comes from mining. And mining is obviously a very capex intense industry, but it's not very intense on the use of office space, right? So we need to balance that. If you go to the next one, number, please. UF, it's a local currency. It's an index that stabilizes prices throughout in a given period of time. It allows you to sign long-term contracts here, and it has been proven to be a very interesting tool for investors, both local and international, on securing long-term contracts and making bids for assets looking for a 15, 20, 25-year investment. Go to the next one. You can see the stability in prices there. It's a pretty stable market. The unemployment rate, obviously, not very away from the rest of the region. We have seen a huge spike on our unemployment rate. The silver lining of this will be that if we combine this with a decent amount of investment, that could turn into a gain in productivity. If that people find another job and they have the tools to start their own jobs, or they see some investment in the economy, we're going to be able to absorb that unemployed people, and it'll be coming something good out of all this. The thing is that we're not seeing that many investments, and the investments that we're seeing are obviously focusing on the initial things I was mentioning, which is mining and some capex heavy industries. It's not like small businesses or services, which are obviously more tied to more office space. You go to the next one, please. Here's a snapshot on our office market. We had a pretty solid market before pandemic. Very few new stock was coming to market. We had a vacancy rate of less than 4%. On some districts it was less than 2%. And now we're seeing that our vacancy rate has gone up to 7%, average 6.1 in Class A, And one thing that we need to take into consideration will be this subleasing activity increasing. We need to track that because I don't think it's going to be that easy for new companies to absorb that new space, mainly because of how tight the contracts are, and especially it'll be hard to combine both interests, the interests of three parties, like the landlord, the tenant, and the subtenant. It'll be complicated to combine interest on both prices, length of the contract, and so on. But it is definitely something we need to take into consideration. Go to the next one, please. Data center market. It's a very hot market here. We have I think it's I'll say it's the third GLA surface here in the market. I mean, in the region, which is very big if you compare the size of the economy with this amount of square meters that we have in data centers. We have major international operators here already here or looking for some new investments. Some of them are looking for land banks for future developments. And I say that the strategy of the government and the development of the economy has helped this from the infrastructure side. We have some submarine optic fiber networks that are looking to be exploited by these data centers, and we're seeing some international developers and some international operators trying to exploit that, not just for this country but regionally. So we're positioning ourselves as a kind of I would say a hub, and that provides us with a very interesting business opportunity for real estate, as we see growth potential there, definitely. On the industrial market, I think the industrial market in Chile is very concentrated. We have I mean, one player keeps like 35% of the market, and I think it's a fairly developed market in terms of product, in terms of product quality and size. We have over almost 5 million square meters of space here with very good quality. We don't have international operators here, and I've been discussing this with Fernando Terra for years. I think we need international operators here. Probably the reason why they're not here yet is the lack of scale. We're still a small country, but we have many international players that are looking for the same suppliers on their services, and I think there's a good opportunity for them to come to Chile on that. If you go to the next one, please, Fernando. It is a very healthy market, if you like. There's no much more speculative investment here as well. It was driven mainly by retail, traditional retail. So most of the offer of the supply you can find it's an okay product with a very good price, which serves serves good the retail purposes of low margins and low cost. That thing has been changing quite a bit in the last, I would say, 12 or 18 months with the eruption of e-commerce. We've seen, if you go to the next one, please, Fernando. This is how e-commerce has grown over the last years. You see the spikes there on 2019 and 20. We've seen a lot of growth here. Those Cyber Mondays and Cyber Day are special days with some offers, same as kind of Black Friday in the U.S. And you see that this year they went almost double on the transaction events, and the sales have increased on their value as well. If you go to the next one, please. And this is the total e-commerce on B2C. This is what actually consumers have bought on these events. You see the spike on 2020, it's over 50%. I mean, it has been growing at a 25-30% year-on-year growth rate, but the spike on 2020 is almost 50. And I'm very optimistic about this trend to continue to be increasing, because you can see in this last slide what are the trends on the e-commerce penetration. You see that light blue line there is the proportion of services that are paid online. You see that how that has increased from 2017 on a very steep curve. And that's a very good proxy on the willingness of the market to go online and start buying things online. And you can see there how it has increased the purchase of goods and other type of purchases online. What is the challenge on this? I think is no different from what Andres just said, and pretty much the same throughout the world, which is the last mile distribution. We have a very solid network of highways and a very good infrastructure on like big distribution centers, and I think we're doing okay with that. But we lack last mile distribution. And I think that that could be a very good opportunity of a reconversion opportunity for some retail space that is not performing that well, but it has very good locations to convert to this last mile distribution hubs that can ease up the distribution on this new purchases. The level of service we can find here at the local distribution are not what you can find internationally, and I think there's obviously room for improvement there. That's all I have.
All right, thank you, Nicolas.